An ounce 100 years ago of gold or an ounce today or an ounce 100 years from now is still just an ounce of gold. It doesn't change at all.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault, brought to you by Kinesis Money. And as you can see, I'm out of Costa Rica again. I'm into the vault this week. And, this is the show right here, Live from the Vault. It goes beyond the headlines to uncover the truth about the gold and silver markets with world-renowned whistleblower and industry expert, Mr. Andrew Maguire. And this week, he's joined by a very special guest, and the Live from the Vault community knows and loves Mr. Bill Holter is in the vault. And for more information about Bill Holter, you can visit him at www.billholter.com, and we'll leave a link below. And today, we're talking gold, and we're talking silver, and we're talking about what's happening here. So let's head over to the UK and join Andrew Maguire and our featured guest, Mr. Bill Holter. Over to you, Andrew.
Thanks, Shane. Well, this is absolutely a privilege. Once again, Bill, thank you so much for coming in, parachuting in at a very appropriate moment, I think. Because what's running through my head, and in fact, as soon as I saw silver breakout, I recall you saying, I'm talking about years and years and years ago, that silver would ultimately bring down the entire fractionally held house of cards. And so now we've got the US short of silver for military and industrial purposes. They've had to recategorize silver as a critical mineral. It looks very much like the fuse is lit, my friend.
Yeah, first, thanks for having me, Andrew. Yeah, I think the fuse is lit. I've said for years I thought that silver would be the fuse on gold. And it's looking pretty squeezy right now. When I say squeezy, from the short squeeze standpoint, we've been in a supply deficit for 5 years. And that's only broadening. It's not coming back to balance. And the only thing really that can balance the supply deficit out are higher prices. Now, the problem in the metals industry is that the supply chain is relatively inelastic time-wise to price. You could discover gold or discover silver today, hit the mother lode, but you won't be in production for 7, 8, 10 years just because you've got to build out the infrastructure. You've got to get all the permitting, et cetera, et cetera. So it's an unusual market compared to, say soybeans or whatever. You just plant more for that year to make up for a deficit. You can't do that with silver. And I think ultimately silver is going to fail to deliver. In my eyes, that's within the next few delivery periods. So I think before year end, you're going to see the silver market break. That will immediately spill over to gold. And the problem with the gold market breaking, when I say break, I'm talking about contracts basically going to zero and physical being not obtainable. The problem with that is gold is a thermometer, barometer, whatever you want to call it. Much, much higher prices means that confidence has or is breaking. And the entire Western world's financial system runs on confidence.
And I remember you long time ago saying, arguing that, it's not that the price of gold has gone up. It's just that it's taken more debased dollars, euros, yen, whatever, to buy that very same ounce, which has not changed at all.
Right. An ounce 100 years ago of gold or an ounce today or an ounce 100 years from now is still just an ounce of gold. It doesn't change at all. The only thing that changes is the measuring stick, and that measuring stick are currencies. And currencies worldwide are going down because gold has broken a new highs in all currencies. Matter of fact, the dollar from $35 in 1971 to $3,500 plus now, that's over a 99% drop in purchasing power. And that's happening with other currencies. And we can talk about yields, if you'd like, sovereign yields, because they're going higher worldwide. And that's the real tell as to what's happening.
Yeah. So what are you seeing? I mean, what are you seeing as far as, I mean, yields are going, I mean, I see it in this country, we see gilt yields going through 1998 highs. What's happening on your side?
Well, yields across the board, sovereign yields are defying, if you will, what the central banks are trying to do. The central banks have started to cut. We're going to probably get an interest rate, a Fed rate cut this month in September. Go back a year ago, the Fed made, 3 cuts totaling 1%. So short-term rates dropped 1%. But while that was happening, long-term yields rose by 1%. So I think the danger with this September rate cut is that they cut rates and we get a sell-off in bonds. Now, that said, well, that would show the Fed losing control of the yield curve. And that's important because obviously, it's the biggest market, and all financial markets are based by a foundation of paper, of U.S. Treasuries. Now, that said, I think the most important yields to watch are the Japanese 10 and the Japanese 30-year bonds. And the reason they're important is because for years and years and years, when Japan was zeroed out as far as interest rates, the yen carry trade is what a huge factor in blowing this bubble to where we've gotten to. And a stronger yen and higher interest rates or lower bond prices, what that does is that's going to unwind the carry trade. So for years and years and years, leverage was put on the long side. And with these much higher yields and a stronger yen, that carry trade is being forced via margin calls to unwind. And when you get something of the size of the carry trade unwinding, it cannot ultimately be a slow, conservative drop. I mean, this is going to it'll be some wild times.
I guess I'd really love your feedback on this because obviously we have a lot to talk to, a lot of people. And basically, because what we see is the global central bank sovereign institutional de-dollarization process is underway. So, and because the bond price is kind of dictated by foreign buyers or the nominal price of bonds. I mean, it looks like, to me, it looks like if this bond yield, if it reached as high as 5%, this was the level that was told to me, they figured that would be the inflection point that would trigger yield curve control. Is that about right? Or
yeah, well, 5% was the high. We're 4.25 thereabouts now on the 10-year, but that was the high on the move. Up from, at one point in time, I think the 10-year traded as low as 0.6 of 1%, or maybe even lower. So it's been a huge move already. And, I don't know if 5% is the number or not, but there is a number that unwinds the entire credit edifice. Because what you need to understand is that the entire world, whether it be financial markets or the real economy, everything runs on credit. And if credit becomes more expensive because it is being shunned by foreigners, how does the U.S. How does the U.S. fund a $2 trillion deficit? That's an extra $2 trillion every year that they have to borrow. And the answer ultimately is the Federal Reserve will buy those bonds. But that is, outright and direct monetization. The problem that the West is in right now is it's a debt trap. I mean, in the U.S., we're paying $1.5 trillion in interest alone. You've got problems in France. You've got problems all over the world with sovereign debt. There's too much of it. How do you service it? That's why they're desperate to get yields down. But Mother Nature, market, is pushing rates higher. And that's where rates should go because there's more and more risk. There's little to no risk premium in sovereign bond yields across the globe.
And so essentially, I mean, the way that just so subscribers understand what we're talking about, so yield curve control is essentially going to flood the market with cheap money, isn't it? And so what's your hedge? What's your hedge? Global central bank gold buying is going to certainly be incentivized. What's the hedge for most people?
Yeah, well, the obvious hedge is gold and silver, and the reason being, gold nor silver can bankrupt. They are money themselves. They cannot bankrupt in a world that is bankrupting.
Absolutely. And I think if we can revert back to silver for a minute, because what we're seeing here is a huge, long-awaited breakout. I mean, obviously, we all know that China has been in the driver's seat for a long time, and they've been playing the arbitrage trade and, being in control of the physical side of the market. They could arbitrage the paper side. But essentially, what we're hearing is, hey, gloves are off now. And especially after Trump's most recent BRICS attack on the BRICS, like clearly putting the BRICS in the crosshairs with tariffs. And then most recently, some very odd statements that he made after the SCO meeting. What's your thoughts there?
Yeah, I think your comment, the gloves are off. I think that's up until this point. I mean, it would be extremely easy to break the Western financial system with $5 or $10 billion. I mean, if you went into COMEX and LBMA and said, "Here's $10 billion, I want metal," it'd be over. There's no way to deliver that kind of metal short term. So it would break the markets. In the past, I want to say that Russia, China, the rest of the world were being polite because they didn't want bombs raining down on them. One of the big things, the reason the dollar has been the reserve currency for so long is the U.S. military. Basically, we forced the world with threat of the U.S. military. If you don't use dollars, I mean, look at Saddam Hussein. Look at Gaddafi. They both talked about, 15, 20 years ago about doing a gold-backed currency. And what happened? They were killed. In the past, countries have seen, those two examples, Gaddafi and Saddam Hussein. They saw those examples and said, well, yeah, we'll just buy it quietly. And now that the war of words is on, it would not surprise me to see either a country or countries together step up. And the Achilles heel to the Western system is the fractional reserve nature of the entire system. But the way to expose that is just create a failure to deliver in either silver or gold, and it'll be both within 24 hours. If either goes, the other's going to go within virtually immediately. So they're at the point now, like you said, the gloves are off, and money is just flowing into whether it be the physical metal itself or even the leveraged contracts in the West. You're seeing foreign nations buy those.
And I think most recently, and I know we're recording this on the 3rd of September, so it's not really a time-sensitive thing we're talking about here, but essentially what just happened, and I don't think this is clearly not going to change, is that it's quite clear from Trump's comments that the SCO meeting between these major hubs that you're talking about, and military powers as well, really ruffled the White House's feathers here, and they're not handling it very well, because basically, I guess really, I mean, maybe I'm naive to think, wouldn't it be better to have a multipolar world where you take all the barriers down? But I guess US dollar hegemony is the problem here, is it?
Well, that's the problem that the rest of the world sees. The rest of the world wants to get out from under Uncle Sam's boot, if you will, by using dollars. They don't want to use dollars, and they'd prefer not to be in the SWIFT system. I mean, ask Vladimir Putin. The U.S., the West, stole 300 billion plus of U.S. treasuries going back to, 2023, October 2023. And you can look at a gold chart. The following day after that news came out, the price of gold started going higher. It's been like a tractor in first gear. The pullbacks, or what used to be smashes, have been very, very shallow. And here we are, we're breaking out, we're new highs on all-time highs on gold, 14, 15-year highs on silver. We're entering a new phase right now. And I think that new phase coincides with the Western bond market. Think the Western credit system is faltering. And it just makes sense. If the credit system's faltering and everything is based on credit, you want to move your assets into something that cannot bankrupt. And that's gold and silver by definition.
Yeah, and you'd mentioned freezing the Russian assets, and how obvious that inflection point was. And that was pretty shortly followed in November of that 2022 by the Bank of International Settlements squaring all the remaining of their 500 tons of swaps, leases, derivatives, and clearly revaluing gold as a first-year high-quality liquid asset on the 1st of January. So but the funny thing is, and I was just looking at Goldman, Financial Times, I think today, on the 2nd or the 3rd today, they published something from Goldman's desk. And Goldman says, hey, clearly there's a lot of unreported buying. So while the World Gold Council show that acceleration of demand, they then show a red dotted line that says, oh no, there's a hell of a lot of unreported gold. And essentially then we speak to our liquidity providers, who one of them is a Goldman guy, and he says, oh no, it looks like, what they're saying is officially, it looks like unreported is probably around about 33,000 tons. But he said, more realistically, we think it's 42,000 tons. So, so much is going on under the radar here. And that's probably because a lot of, when you think about the gold that's flowing into China, gold and silver flowing into China, it goes through 42 customs districts, which have 680 individual customs offices. There's so much fiddle room here. It's unbelievable. And of course, we've known for years, people look the other way. It's probably very likely, and the feedback we get, this is military. This is to stock up military critical assets. Gold and silver are critical minerals.
I spoke about this probably back in 2016, 17, 18, with the amount of gold that was coming into Shanghai, was many, many, many multiples of what the government has raised. What are they at? 3,200, 3,500 tons, something like that, China officially. The real number absolutely has to be over 25,000 metric tons, and that's triple what the U.S. says we have, and we haven't audited since 1956. So I think clearly China has way, way more gold than they say they have. I think probably Russia too. And just go back to the old saying, he who has the gold makes the rules. And that's what they're preparing for. They're preparing for the dollar/bonds, treasury bonds, to implode. And that if a country has no gold on their books, on their balance sheets, then they're stuck with that black hole of loss. Whereas if they've hedged and now have a good sized position in gold, what they lose on dollars, they're going to more than make up on gold.
Yeah, and when the smart guys do their numbers, and we listen to Bloomberg all the time, we look at all this analysis going on. When they do their numbers, then they're not basing it on the reality. They're not basing it on the fact if there is that much gold that is actually being off-taken, and whether it's in doré bars that are going through other refineries that aren't reported, or monetary gold which is not reported, then the stock of gold available is so small. So the ludicrous fools who call gold down are completely missing the real picture.
You're absolutely correct on that, and you would have been more correct if you were talking about silver rather than gold. I mean, there's no big silver. You can't make any big purchase of silver. I mean, it's not available. The world's been in a deficit for 5 years. The deficit is widening, and I mean you can see it. You can see the demand in both gold and silver by looking just at the front COMEX month each month, because you have, and I'll just use a round number of 100. You have 100 contracts standing for delivery day one, and by the end of the month, it's 150 or 200 contracts. And I know you remember very well, Andrew, the days back when there would be 100 contracts standing on day one and only 23 standing by the last day. You'd have a lot of the front month contracts would bail out, they'd sell them and cash settle. That's not what's happening now. You've got buyers that are presenting their contract and say, hey, give me the metal.
Yeah, and that is a dangerous game for the COMEX to play. And I think, to be honest, we all saw those WikiLeaks reports that said why that actually illustrated or quoted the people who said let's get this COMEX market up and running. And I think it was 1974 when it actually was plugged in. Gold was plugged into the existing COMEX at the time, which I think COMEX has been running since the 30s. But they clearly said what we'll do is we'll introduce volatility, we'll make it very unattractive. And where we've kind of come to the point now, what you're just saying here, essentially, there's nothing in there they've got no control. They're losing that one tool they had.
Yeah, and that one tool, COMEX futures, let's just use the word derivatives. They were able to bully the price of gold, bully the price of silver downward, while bullying or helping the prices of assets that they wanted higher, like bonds and stocks. They could bully those higher. The problem is, well, first off, let me just go back and say that I believe, and I think, tell me if you disagree or not, I believe that the contracts were originally issued, as you mentioned, to increase volatility, scare people, but also as if you want to call it a pressure relief valve on the buying of physical gold and silver. I said the same thing when GLD and SLV were created. I viewed those as pressure relief valves. I mean, they don't have to own any physical metal. They can have all contracts. And I'm going to go one step further, and don't know whether you'll agree or disagree, but I believe that the crypto market was created as a pressure relief valve from gold and silver, because they are viewed as an alternative, a dollar/currency alternative.
But silver's got my attention at the moment, and because you and I always have talked about silver. You've been so far ahead of the curve on silver, and I think it's now being by the US now suddenly naming it as a critical mineral. to me, that would mean that they're caught in a rock and a hard place here, because that means that US mined silver, that they probably start banning the sale of it. It has to be bought internally, perhaps. I don't know. What's your thoughts? Because to me, why would you allow a critical mineral to be sold?
Right. Well, I mean, look at it this way. Naming it as a strategic mineral or strategic metal automatically creates the demand of whatever the government's going to buy. And it automatically reduces the supply available to the market because that supply is being bought up by the government. So you've already got a disastrous supply-demand equation. They just poured gasoline on that fire.
Yeah, and of course, what you essentially were saying here is that every other central bank, every other sovereign, everyone else is going to say, well, I'm not selling my silver at this price. I want a much higher price, and I don't quite know what that is yet.
The much higher price, I made the comment before we started recording, be careful what you wish for.
Yes, yes.
When we go through $50, and that's if markets stay open. I mean, there could be a failure to deliver, this month. I mean, who knows? But once we get through $50, you've got people talking $100, $200, $600 silver. There's really, in today's world, there is no way to project a number that gold or silver can go to. And I mean, the reason being, the parameters are zero and infinity. And the reason infinity is a parameter is because if a currency goes to zero, then it is priced at infinity in that currency. In other words, no amount of currency can buy an ounce of gold. That currency won't be accepted. And that's where we're headed on a global basis. I mean, if you think that the US dollar can collapse, crack up, and the system remain running, that's not going to happen. It can't happen.
Yeah, I think this is, that's something I think when we first...
It's a giant margin call.
Yeah.
This is a giant margin call that we're looking at. It's the margin call. It's the mother of all margin calls because the entire system is going to be called.
As you say, be careful what you ask for. So we all want a higher silver price. But what's that going to do? How do you think that'll play out? I certainly, obviously, it'll play out very well for the physical markets, the global physical markets who have got enough of this physical silver to play their game as they want to do now. I mean, in other words, and the fact is that now that everyone militarily is also looking at silver, and not just for green purposes, AI and all those kind of things. So who in their right mind is even going to, I mean, if you're a producer, yes, you have to sell, you have to keep in business, you have to sell something. But on the other hand, maybe you're not going to hedge it anymore.
Well, there are companies that have I think at one point, First Majestic was holding back some of their production and not selling it because silver in a vault is better than money in a bank. But the be careful what you wish for part, if we had, and I don't know what the number is, $5,000, $10,000, $25,000 gold, and I don't know what the number is on silver, but there's a number out there that implodes those markets. They no longer function as far as being able to deliver, which makes those contracts worth zero, but the ounces worth, immeasurable numbers. What that will do is it will break confidence. The entire system runs on confidence, and you'll see the system sputter. I don't believe any markets will still be open 72 hours after a failure to deliver. And if you get markets closing because everything runs on credit, then you enter the very real possibility, if not probability, of a spell where we live Mad Max world. And nobody wants Mad Max world. I mean, you could be sitting on the biggest pile of silver and it's still not going to do you any good because if you've not prepared food wise, where your position is. Can you defend that position? It's Mad Max World is something that no one, no matter how wealthy they are, no matter what they own, what they have, no one's gonna thrive in that world.
We talked about this once before, Bill, and it really interested me, and it interested a lot of my friends and subscribers. I know that you have taken responsibility for yourself a long, long time ago, and you've moved yourself into a self-sustaining environment where, if you had to, you could hunt your food, you could provide your own power, water, etc., etc. And that is obviously the ultimate position. As you say, no matter how much gold and silver you got, if it's going to be difficult anyway. So you need food, but I think silver would, for the people that can't, who are stuck in a town, for example, obviously we suggest to them, look, at least get out of these worthless $0, or what will ultimately be a $0, into maybe some silver coins. And at least even if you haven't got a lot of spare money, at least to diversify into gold and silver. So for those people living in a town that can't do what you can do, and obviously I would recommend people try and contact you and find out how they may do that. But what should they be doing, Bill? Because they'll be looking at this thinking, yeah, what do I do?
I believe that your current location is more important. I mean, obviously having some metal outside of the system, that's a must. Otherwise you have no money. Because when this goes down, the wealth accrual into gold and silver will be beyond what anybody, including you or I, suspect is coming. I think it's going to be far larger. But I think your location is the most important. You can't use your gold and silver if you're dead. And if you live in a city right now and the system goes down, you're dead. If you don't have a place outside of the city where you can, let's use the word hide, pull a rock over the hole and wait for the storm to clear. If you're in a city, you're dead. There's no way to defend yourself. Suburbs, it'll get there, pretty quickly. But out in the country, I mean, if you are remote, and you've done some things such as, power source, a water source, food sources, food stocked up, and a way to defend that position, you're going to last an awful lot longer, and you may make it all the way through to the other side, however long that takes. But I think your location, at this point, is the most critical decision for people to make at this point.
I think people should check out, and we should all take responsibility for ourselves. If you're unable to make the kind of move that you have done, Bill, I have heard of these organizations where, as you say, like-minded people have set up funded community where essentially everyone takes responsibility for themselves. They're armed, you've got food, you've got a basically somewhere where you can actually serve each other and put a ring fence about yourself. So people should do their own research on that, because I know it's there.
A good source to research is right on my website. I have an icon up top. It's called Grizzly's Corner. And that is written, there's probably a dozen or more articles. This is a guy who can go up into the mountains with a pack of mules, live for 6 months, and come out, stronger than he was when he went in. It's a great resource, and there's all kinds of links within his writings of products and things that he's actually used. So he can say, he can say, well, you could do A or B. I tried A, it wasn't really that great, but B worked, and here's the link to it. So that's a great resource if you're wanting to prep. It's a Grizzly's Corner on my website, is a great resource.
Oh, that's very helpful, because I mean, people say, well, where do I start? I think that is something that, yeah, we should all be thinking about this. And of course, people say, well, hey, what are you talking about? But because people actually don't believe what we've just talked about is definitely coming. So when the banking system is broken, sorry,
it's mathematics. This is no longer your opinion or my opinion. I mean, 10 years ago, people could laugh at us and say, you two are idiots. But they can't do that now because it's math. You have governments officially telling you that they're on the ropes financially. I mean, the fact that the U.S. has to pay $1.5 trillion per year, and it will only go higher, $1.5 trillion this year, probably $2 trillion next year in interest alone. That is the U.S. government pulling their pants down and saying, look, we're bankrupt.
So we got the Fed coming up in September here, and we have Powell on his heels here by the looks of it, and saying, indicating he's going to cut rates. Should he be cutting rates?
I don't have a clue what he should or shouldn't do, because it's the system itself that doesn't work. So, the guy who's steering the bus, it doesn't matter whether it turns left or right or whatever, the system itself mathematically cannot work. My biggest fear is that this month you will see a rate cut by the Fed, and you get a dollar sell-off, which would make sense, and also a bond sell-off, which wouldn't make sense. That would illustrate a loss of control of the yield curve, loss of control of the credit market. I think it's because it just did happen. As I mentioned last year and a half ago, when the Fed was in the rate cutting cycle, yields actually went up by full percentage point when they cut rates by 1 full percentage point. What's it going to look like if the Fed cuts rates? Let's say they cut 50 basis points, and all of a sudden you see 30, 40, 50 basis point rise in treasury yields, not the short end, but the long end. What does that say to the world?
Yeah, I think I read something on your website where you quoted, absolutely right on, saying that you were commenting that Trump now has the majority of the Federal Reserve Board, and you said bye dollar. So, but essentially, that's what you're saying.
I did. Yeah. I mean, if you can, his mindset, and I mean, it's because the way the system is set up, and it goes back to Richard Russell's inflate or die. That's the way the system is set up. We can never have a 5-year, 10-year, 20-year period of time where asset prices stagnate or go down, because everything is based on credit. Everything is borrowed against, and lower markets means margin calls. Where does that margin call money come from? It's not available. So it's a margin call that can't be met, and everything's going to get sold. And of course, they've already planned for this by putting the laws on the books that David Rogers Webb exposed in The Great Taking. That's absolutely real. No speculation whatsoever. All those laws are on the books, and the ink is dry. When the system goes down, you're going to lose whatever you have with your institution.
So when they break it again, but this time, as you say, mathematical death sentence is one of your comments. So when they break it, then, I mean, to me, this time I don't see any way of coming back.
They have to burn the whole thing down and start from scratch with a very limited use of credit.
So when they
and that credit can only, hey Andrew, that credit can't be fractional reserve credit. It's going to have to be credit that comes off of physical unencumbered assets and basically off of the value of gold. Whatever value of gold gets to, that's how much credit will be available, but no more. That's the way they need to rebuild the system.
So here we are, 54 years later, after Nixon decoupled.
Temporarily.
Yes, temporarily. But 54 years later, then we have China, whose yuan is actually one-to-one exchangeable with physical gold. Now, so you've kind of got this reversal where the dollar was once backed by gold and it's now worthless. And China, in their long thinking plan, has now successfully backed every single transaction that they do, commodity transaction, whatever it would be. So you can end up with a yuan for your oil, whatever it might be. And you can then say, I'll tell you what, I'll either hold that or I'll swap it for gold at that price. So to me, what a kind of a dynamic shift of power is right under our noses here.
It's awesome, the size and scope of what China has already done with accumulating gold, and their backing of, they don't back the currency with gold, but I guess you could say they de facto do, because you can take the currency and, like you said, exchange it into gold. That is awesome if you look at where the West was and where it is now. I mean, the West was similar to that. You were able to convert dollars or marks or whatever, pounds, into gold. And over the years, that ended. So now China's starting it on the other side of the world. And it'll probably work well for, I don't know, 10, 20, 30, maybe 50 years. But they'll end up having the same problem that the U.S. had with $35 gold and Charles de Gaulle coming in and saying, here's $35, give me an ounce of gold. Here's another $35, give me an ounce of gold. And my late partner, Jim Sinclair, was adamant that any gold-backed currency would not be convertible. And the reason it will not be convertible is because if it's convertible, it converts. And then the issuer ends up with no gold.
Well, Jim Sinclair, you were his advisor and partner for many, many, many years. And what a great pedigree. I mean, you must have valued those years enormously, Bill.
He was the black sheep. He was the black sheep of his family, because he was spilling the secrets that the families didn't want the public to know.
I remember reading your stuff. I mean, it must have been 30. It must be 30 years ago. I don't know. It's a long time ago. And you used to work with him. I met him, luckily, that one time physically at the GATA conference. And what a lovely man. I mean, what a humble, gentle man he was.
And smart. Super smart.
Super smart. Well, I mean, that certainly rubbed off on you there, Bill.
I learned a lot from him. Hopefully he learned a little bit from me.
Well, he'd be looking down, and I'm sure he's looking at your gold stash, and you're, no, don't come after Bill. He's got no gold at home. Not that you can find, anyway. Look, it's been such a buzz. I mean, basically, I think what we're saying here is really, and you say it multiple times. Has there ever been a better time to opt out of the debt-riddled fiat system and just swap some of that garbage for physical gold and silver? Is there ever a better time?
Well, actually, the answer to that is yeah. The best time to have swapped out would have been for Americans. I mean, I can't say for foreigners, but for Americans, 1976, when gold became legal to own. That was a better time because you got more ounces for your dollar. today's a better day than tomorrow, a better day than next week, a better day than next month, and a better day than next year. Because once this happens, once markets crack and they actually break and close, your access to funds will be gone. Your funds will be gone via the great taking. And there's nothing you can do about it at that point. Nobody's going to sell you an ounce of gold for however many dollars, or an ounce of silver or gold for however many dollars you have, because as the meme goes, they become, on the metals chart or the periodic chart, they become unobtainium.
Absolutely. I mean, this is it. I mean, people are going to look at this and they'll say, you know what? I think what we're saying here, Bill, and it's kind of the common thread with all of these educational sessions, which they are, it's all about taking responsibility for our individual selves, and no one else is going to do it for you. It's so important. And when you have the knowledge, it's one thing to not have the knowledge and get caught out. And yes, it could be very dire. But when you have the knowledge, you need to act on it. And I think we've talked about stuff here. There are people who will be unable to do so, but there are many, many, many people that can make those changes, make those choices, investigate them before it is too late. And you did it. Why wouldn't anyone else? If you believe passionately in something, then you can make it happen.
Yeah, you can make it happen. I think the number of people, once this is in the rearview mirror, the amount of people that are going to say, how did I not see this coming? It was so obvious. I think those numbers are going to be huge.
Well, I think that is a perfect place to wind it up, Bill. I mean, there it is. It's said. All the data's there. Make your own choices, guys that are watching this. Make your own choices. But it is all about taking responsibility. And I think I really thank you for coming and sharing. You always share some salient information. This is an action point. I hear an action point. Bill, what's the point if it's not an action point? It's just more noise. So thank you for joining us. Thank you for all that you are, and you showing us the way here, showing everyone the way. It's possible. But thank you so much for joining us today.
Thank you, Andrew.
All right. Thanks for joining us on this episode of Live from the Vault, brought to you by Kinesis Money. And a huge thanks to Andrew Maguire and our featured guest, Mr. Bill Holter, for cutting through all of the noise and sharing insights that you just won't find anywhere else. And if you like this episode, make sure you subscribe right now. Turn on the notifications so you never miss out here on this critical information. And don't forget to share this episode with someone who really needs to hear the real story behind the headlines. And we're back soon with more hard-hitting truths from inside the precious metal space. And until then, thanks for watching, and we'll see you next time right here on Live from the Vault. Bye for now.